Man, what a disaster of a day today. The CPI data came in hot, stock prices are going down. What does this mean for my small account? So let's take a look at some of the damage. This morning around 8:30 Eastern time, the CPI data was released and stock started dropping big time. We did see some recovery overall, but you can see right here that on the day, I'm down $1,000. Now, you can see here with the E-mini S&P 500, I'm down $761 on the day and $358 on Tesla. I'm not too worried about Tesla. Many stocks went down today, so it's not just an isolated event, especially with the E-mini S&P 500, which is the stock market. So stocks are down, everything is down as a result of this. I'm bullish on Tesla long term, so I'm not really worried about that position. If it continues to go down, it's just a matter of time for me before it goes up. So I'm willing to hold on to it instead of accept a loss because I know the potential that's in Tesla. With E-mini S&P 500, we can see that I'm down $761, but really since I've had the position, I'm down $463. So it is a big swing today, but overall it's fine. And my positions are out of the money still. And that's the main part of my 30-20-10 strategy right now is that, yeah, it's a down day, but I actually have some positions that are still green, and it's the ones that are about to expire. I actually made no trades today, and you can see right here my option buying power is $147 in the red. So I actually didn't have any money to be able to trade because the stock price, because everything is down, my capital requirements are up, my buying power usage is over 100, so I couldn't place any trades for that reason. My contingency here is if I do need to make a trade, then I'll just liquidate my T-flow position. That's a cash position that I have that I can liquidate at any time, and it pays a 5% dividend right now over the course of a year. So it's an easy place to put your money, and then whenever you have to liquidate, that's my plan. That's what I'm doing. So I've got around $2,200 sitting there. And then also with my 30-20-10 strategy, I have many open positions right now, but whenever I have to do damage control, it doesn't cost me any extra buying power. Using my margin account allows me to be able to place a call spread for no extra buying power. So here it is, the big red candle on the day. We went all the way down to around 51.74 and we pushed right back up here. So it was good to see some buying pressure here going toward the 50 moving average. But we can see here that overall the 8 EMA and the 21 moving average are starting to touch. And so that's not a good sign. We're seeing a change in trend here, and this could be a pullback, right? I mean, the markets have to ingest the data that was received today, and so we could still see some selling off. Who knows what's going to happen, right? But we can see here that we are basing out right here after a pullback here, and this could just be a shelf, and we could continue to go down if it breaks the 50 moving average. So we could be in trouble if we start seeing that prices are going below this 50 moving average. So looking at the weekly chart here, giving kind of a more zoomed out view, we can see that we're resting on the 8 EMA here on the weekly chart. So we haven't broken that level. We broke it, but it didn't want to stay there. So many people look at the weekly chart. I think many people saw this as a buying opportunity if it goes below the 8 EMA. And so it's holding right now. Now, is it going to stay there? Time will tell. We'll see what the next week has in store for us. Are we going to see some buying pressure here going up? We'll just have to play it and see. We can see here with the SPX, which is just like the E-mini S&P 500, we can see here that it is holding above the 8 EMA. So it doesn't want to break there. That's a good sign. That kind of tells me that this potentially could be just a pullback, right? And then we'll be seeing push back up over time. So right here, you can see that some of my trades are actually still in the green, and that's because they're about to expire. I opened this position at 30 days to expiration. It only has one more day left until it expires, so that's tomorrow. As long as it stays above 50.75 tomorrow, then I'm going to collect $75 there, which I think it's a little bit more because the spread is more than $10. And so that was kind of a mistake on my part whenever I first placed the trade. And then the next day, as long as it stays above 50.70, then I'm going to make $75. And so that's my plan there. And so far, I'm still in the green as long as it stays above the price, the strike price, because it's so close to expiration. And I opened the trade 30 days ago. So you can see that even though the price is going down on the E-mini S&P 500, I'm still in the green on the positions that are going to be closing. And so that's what I want to see. And then as I place new trades, it is adjusting to the current price. So as prices are going down, I'm continuing to get a 20 delta. So it's going further down the strike price as prices go down. What my goal is it doesn't matter if the price goes up or down. What matters is that it stays above my strike prices within that 30-day window. So that's the biggest goal. And seeing what I'm seeing now, maybe I don't do 20 delta. Maybe I do a 30-15 delta 10 strategy. And so it's a new strategy. I'm testing it out, making adjustments as I see fit. Currently, what I believe right now is that I'm in too heavy. Right now, my capital requirement is $9,300 right now. That's a big portion of my account. I don't want to be so heavy in one underlying. I'd like to be spread out more into futures, smaller positions, and I have more diversification that way. So maybe I do it every other day instead of every day in the E-mini S&P 500. And so I can spread out and do different strategies instead of being so consolidated. I want to reduce that exposure risk. So looking at Tesla here on the week, we can see we have a green bar still, even though we've had the news that came out today with the CPI report. We have a pullback here after it had two green candles pushing up and breaking through this trend here. And it's resting pretty well on that trend line. So that's not too bad of a signal for me. I was expecting that we would see a bigger drop here. And hey, maybe the worst is yet to come. But I was really expecting that this was going to drop because of the news that came out on inflation and because of the chances of not having any rate cuts. I think Tesla is very dependent on rate cuts for its success. But with the plans of Tesla having the robo-taxi in August, I think that has investors excited and not too worried about the rate cuts. And I'm seeing what I want to see out of copper because I really needed this price to go down or at least stay stable. And I think that's what we got today. It did want to go up, and it looks like we have kind of a tweezer top up here at around $4.35. And it decided to come back down after the news. And we see it kind of forming a doji in the middle here. It is kind of resting right here. What I'm wanting to see is it to rest around 425 and 420. And the reason for that is that's the optimal place for me to be to take my 50% profit. The quickest way I can take my 50% profit is through time decay, and then as implied volatility goes down. And if the price can stay in this range here, that's the quickest way that I can get my profit. But really right now, it's sitting in a good place. It's right in between my call and my put. So it's really in a good place. I'm not too worried about it right now. My concern is going to be if it starts ripping up after this consolidation period. What I want it to do is rest and come down a little bit. So we'll see what happens. So overall, I'm a little concerned about the market overall. I think we're at a pivotal moment right here where we could see the stock market continue to go down. And I have a new strategy here. I'm $9,000 in. So I feel like I've got a lot of risk in this position, but I have some confidence because I do have a contingency plan of selling call spreads and rolling it out 2 weeks at expiration. And that way I can collect premium, drop my put spread, and then let the 2 weeks roll. And so that's my game plan with that. We'll see what the rest of the week holds. And again, I'm a new options trader. I don't recommend that you follow me trade for trade at all because I'm testing things out. What I'm hoping is that I can go through my learning experience and you can watch me, whether it's good or bad. Maybe you can learn something from it. If you want to follow me on this journey to a 50% return, hit that subscribe button. And if this video was a help to you, hit the like button and we'll see you on the next video.